Hi, everyone. I'd like to provide a concise overview of the U.S. stock market performance for the week of May 19th to May 23rd, 2025, a period marked by heightened volatility, driven by rising bond yields and renewed trade tensions. Weekly market performance. All three major indices posted weekly losses of approximately 2.5%, erasing gains from the previous week. The S&P 500 and Dow Jones Industrial Average declined by 2.6% and 2.5%, respectively. The Nasdaq Composite fell 2.5%. These losses reflect growing concerns around interest rates and government policy. Bond market pressure. A significant factor influencing market sentiment was the surge in Treasury yields. The 30-year Treasury yield climbed to 5.15% midweek, before closing at 5.036%, up 14.1 basis points. The 10-year yield rose to 4.508%. This move was largely attributed to investor concerns about the U.S. deficit following the recently passed tax and spending bill, alongside Moody's downgrade of the U.S. credit outlook. Trade tensions. Resurface investor confidence took another hit when former President Donald Trump announced potential 50% tariffs on EU imports and warned that iPhones manufactured overseas could face levies. Apple shares fell 3% in response. The announcement dragged down the broader tech sector and contributed to overall market weakness. Safe haven. Shift as risk-off sentiment intensified. Gold prices surged over 5% for the week. The U.S. dollar weakened against major global currencies, reflecting reduced foreign investor appetite for U.S. assets. Closing thoughts. In summary, the week was defined by investor caution amid rising bond yields and escalating trade tensions. As we look ahead, market participants will closely monitor economic data and geopolitical developments, especially around trade, to guide future positioning. Thank you for your attention.